Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonia Shenoy, and it's 24,700 on the Nifty. It's been a great start to Tuesday morning. 100 points up on the Nifty. The sensex is up more than about 300 points. It slipped a bit in the last 15 minutes. The high today was 24,735. So it's come off a bit, but still going very strong, up about 0.5%. And it's banks and IT which are pulling their weight today for the market. So the Nifty banking index is up close to about 3/4 of a percentage point, and IT too is firing for the bulls.
Hi. Oh, absolutely. Hi, Reema. Good morning. And what a nice morning, right, on Dalal Street. I mean, everything that you've wanted has sort of shaped up in the market today, given the kind of positive global cues that we have, given the kind of buying from domestic institutions for 8 straight trading sessions. So all of that has been pretty good. And even if you look at it, even in terms of individual stocks, right, very strong listing coming through from Saraswati Sari. 27% higher. It's day one over there. Of course, this is a stock, this is a fairly smaller IPO, but the new listing has done very well. And a whole host of other stocks. The Bank Nifty well above that 50,700 mark. So things are looking quite good. Let's see how the rest of the day shapes up. We, of course, have a lot of global cues to watch out for as well. But TCS has been gaining after brokerage firm Macquarie issued a bullish call on the stock and raised the target price. What is Macquarie saying?
Well, first, the target price stands at 5,740, and currently the stock is at 4,500. So we're talking about a good 1,200 rupee upside from current level. Secondly, the reason for the increase in target price is a re-rating in the valuation multiple, not a change in the earnings. So now they're valuing TCS at 35 times FY26 PE, and they've also added the company to the marquee list. Now, TCS, about 10 days back, held an analyst meet where they were showcasing all the technological developments that the company has been doing, particularly on AI front. So Macquarie attended that, where the company demonstrated its investments in AI, some of the use cases, and they came back quite impressed. So they're saying that TCS has created a legacy modernization framework based on AI. So using AI, they believe that legacy modernization can be done with greater accuracy and lower cost, and this potentially opens up a large market for TCS. Not just that, the company, amongst other things, showcased its autonomous vehicle platform with an algorithm that supports more than 50 plus features. So they're just going back to the point that TCS is a very, spends a lot on its innovation. In percentage terms, it may look at just 1.2% of its overall sales, but in absolute terms, the company's R&D spend stands at $300 million every single year. So according to Macquarie, TCS is best placed because it's got the broadest portfolio of services, geographies. It allows for growth, and at the same time, there is lower risk. So big target price increase by Macquarie on TCS, and they've also added the company to their marquee list. But moving on to IndiGrid Bank, that's surging in trade. The company has got an RBI approval to set up a mutual fund asset management business. Abhishek is here to tell us more.
Well, for IndiGrid Bank, the bank has received approval from RBI to set up a wholly owned asset management business of a mutual fund. This is to be done via infusion of equity capital into that mutual fund business. So there are additional conditions in the letter as well. Just to alert our viewers, the promoter, that is Hindujas, have taken a 60% stake in Invesco. So Nomura has written on IndiGrid Bank they have a neutral rating with a target price of 1,580 per share. They said that this is a positive development for the bank, given the fact that they are not currently into any direct para-banking subsidiary businesses. So this would be a booster for the bank. Back to you.
Okay, thanks a lot for that. Let's do one thing. Let's slip into a short commercial break. On the other side of the break, we'll discuss what's buzzing in the commodity market. Gold continues to trade around record highs. So more on that coming up in a bit. Welcome back to Trading Hour on CNBC-TV18. Well, it's turning out to be a really good morning of trade. So we haven't really given up on our gains too much. There are plenty of stocks that are in focus. In fact, even in the commodity markets, we've seen some good traction, especially in some of the precious metals like gold. Manisha Gupta joins in, and today we are focusing on the metal space. Manisha, over to you.
Thank you for that, Sonia. Well, yes, gold is holding around its all-time highs, around $2,500 an ounce. Silver has been trading at a two-week highs as well. And if you look at the broader base metals, industrial metals, they seem to be doing well as well. If you look at the dollar index, that has declined quite sharply, trading at a 7-month lows. We've seen a break below 102 as well. And that in turn seems to be supporting many of these metals, which in any case had gone for a very strong correction in most part of July and the first half of August as well. And then apart from that, the investors also will be bracing for the FOMC minutes that are coming in on Wednesday, and the Jackson Hole meeting over the weekend will give you a sense on what really can be expected in sense of rate cuts. So ahead of that, we've seen some bit of a opportunity buying coming in for many of these metals there. So when you look at the copper prices with the kind of gains that we've seen, we're trading at around 2-week highs. Nickel has recovered from its 5-month lows. You have steel prices gaining past 3,000 yuan as well. Steel prices did decline to almost 2,700 around the first week of August. So we are looking at good buying opportunities coming in for many of them. Actually, when you look at the last 1 week itself, we have seen copper prices gain up by almost 2.5%. Silver is gained up by 5.5%. Steel is up 3.5%. And good gains is what we have seen in aluminum and zinc as well. Gains of between 3.5% to 4.5% for this one as well. And nickel is gained up by 3%. So the markets are looking at buying coming in here with the decline in US dollar and the expectation of a rate cut. You could be looking at some more buying momentum continuing for this sector.
Thank you very much for that. The metal index, though, is not moving at all. It's absolutely flat. So base metal prices up, but crude prices, remember, have been on a decline. Brent is now at $77 per barrel. But let's get in a corporate conversation going. IndiGrid is on our radar today. Recently, the company had reported their numbers. It was a good revenue growth in Q1. The management said they're on track to deliver the distribution per unit guidance of 15 rupees for FY25. They also recently entered into a partnership agreement with Techno Electric to develop 2 interstate transmission system projects. Harsha, the CEO of the company, is now with us to talk about the overall business outlook and this tie-up that they've done with Techno Electric. Harsh, thank you very much for joining in. First, if you could just explain to us the complete contours of your deal with Techno Electric for these 2 transmission projects.
Hi, good morning, and thank you for having me. This transaction is not just with Techno Electric. This partnership is with 2 other investors called BII, British Investment International, as well as Norfund, which is a Norwegian sovereign wealth fund. So this partnership between IndiGrid, BII, Norfund, and Techno Electric brings together a set of professionally run investor firms with a developer to develop more transmission projects in the renewable energy and energy transition space. And eventually, when these projects are completed, IndiGrid will be acquiring them as a whole. So Techno Electric will be doing EPC for these projects, besides also investing minority equity. IndiGrid will be investing equity. BII and Norfund will also be investing equity. So it's 4 partners investing equity for these projects, Techno doing the EPC. And eventually, IndiGrid will acquire these projects on commissioning in entirety. So the Techno gets to do EPC, IndiGrid gets to have a pipeline for growth assets. That's how the partnership is built.
Okay, got it. So what is the ROE that's guaranteed on these projects? Is it in line with some of the other, transmission assets? And I mean, going forward as well, what should one expect?
So first of all, there are no guaranteed ROEs on the transmission projects. There is only in the regulated tariff mechanism projects. That also has stopped, and then I don't think incremental projects are coming on regulated tariff mechanism even for Power Grid. These are competitively won projects. And there is no fixed ROE for all the investors and developer. So if the project is completed in time, within cost, all of us would be making healthy returns. If it's not, we would take loss to that account. But with the partnership that we already have in place and the track record, we are pretty confident that it will be completing in time and budget. In terms of future, we are looking forward to take this partnership to greater level and do bigger projects. These 3 projects put together are relatively small, but they start, I would say, they mark a start of the partnership in this space between 4 of us, and we will look to grow this and do bigger projects in a similar manner.
So if the project is completed within the stipulated time period, as you're hopeful, then what would be the ROE?
Usually people bid in transmission in the range of 13% equity IRRs, and that's what we'll intend to make over here.
Got it. And if you could also help us with the shareholding pattern, because you're, the principal partner, but there are 4 other partners who will also be investing. So what will be the shareholding pattern?
So in this case, see, most of the investment will be via convertible instruments because there are lock-ins from different partners as well as the foreign investment directly coming in the shares has some issues. So we are, in general, capital contribution-wise, Techno will be contributing 20%. And the rest of us, between BI, Norfund, and IndiGrid, the 80% will be almost divided 1/3 between the 3 of us.
Okay. And before we let you go, can you tell us about any fundraising plans that you would have in order to expand your AUM?
See, at this point in time, we are at 61% leverage. We have another 6,000-7,000 crores of growth headroom already with us. So we are pretty comfortable in terms of growth. We don't have any imminent fundraise being planned right now on a primary side from IndiGrid.
So going back to this partnership, you also indicated that you plan to take it to the next level and bid for more projects. Could you elaborate what's in the pipeline?
Sure. See, in general, the transmission space is looking at phenomenal amount of pipeline. We are looking at almost 1 lakh crores of identified projects that are coming for auction for next 12 to 18 months. To give perspective of scale, over last 10 years, there'll be around 1.5 lakh crores projects bidded out. So it's like a 10-year growth coming in 12 to 18 month period. So we are seeing that kind of a growth pipeline coming for bidding at this point in time. We would look to bid, and even a 5-10% market share would translate into 5,000 to 10,000 crores of pipeline for us, when we are pretty happy with that.
And is there intense competition in the transmission bids?
It's a function of the size of the pipeline as well. There are established players and there is competition for transmission project. The reverse auction process gets competitively intensive. However, I mean, when there's a pipeline of 1 lakh crore, I think all of us have reasonable confidence of winning projects at rational pricing.
Harsh, great conversation. Thank you very much for explaining the contours of your partnership and the way forward. Need to get into a short break. We'll come back and discuss market technicals. We'll invite Mitesh Thakkar on our show. Welcome back. One of the big movers today is Nucleus Software. That stock is up close to about 18% in trade today. But remember, it's been an underperformer. So year to date, now it's up 20% on Nucleus Software, so locked in an upper circuit. But this up move comes after a period of underperformance. So year to date, the stock is down 4% at a time when the Nifty IT index is up 17%. In the last 1 year, the stock has given you returns. It's up close to about 36%, but it's still down 24% from its recent high of 1830 that it hit at the beginning of January. So it's done well over the last 1 year, but again, it's 24% off from its recent 52-week high. The reason for that 20% up move is that the board is meeting on the 22nd of August to consider a buyback of share. The company has about 920 crore of cash on its book, and previously the company had done buybacks in 2021 and 2017. And now with the change in guidelines effective 1st of October, the company looks to be rushing in to do that buyback before that window closes. Another big mover today is actually Unicommerce. Unicommerce e-Solutions. Remember, that is a recent listing. It's another 8.5%, and this stock has more than doubled from its issue price of 108. It had a big listing pop, but after that, it continues to climb higher. Pull up a 2-day gain of Unicommerce Solution. Yesterday, it was up nearly 20%, and it's followed it up with another 8 to 9%. This is a company which provides back-end software to e-commerce companies to help with their shipment. But let's move on and talk about All Cargo Logistics, because that's a big mid-cap mover. They've recorded their highest ever monthly volumes for July. Mangalam joins in with the numbers.
Good morning. So, the highest ever monthly volumes have come in for the less than container load business, which is basically a more margin accretive business. And that's why all cargo logistics is higher in trade today. And this, follows a spate of weakness that we've seen in international trade itself. So maybe the street is hoping for some turnaround coming by out here as well. So LCL volume at 8.1 lakh cubic meters is the highest ever volume, surpassing the levels that they did in August 2022 itself. And while it's an 11%, while it's a 6% growth month on month, it's a 5% growth year on year as well. And they believe that the freight rates will continue to stay high. In fact, volumes have increased on the back of improved global trade and the company's growth initiatives itself. And they expect momentum to remain through the year. On the back of volumes, they said that freight rates also anticipated to stay high until the end of peak season. For the full container load business, they've seen no decline in volumes quarter on quarter. In fact, year on year, there has been an increase of about 7% as well. So these two factors taking the stock higher in today's trading session, though from the highs, it's seen a bit of a correction. But now if things are improving in this space, then maybe the street is looking at sustained improvement at least until the end of the season.
Okay, thanks a lot, Mangalam, for that. Well, BPCL surges after Citi has issued a bullish call on the stock. Brokerage MK also reiterates their positive stance on the OMCs. Sonal is here with more details. Sonal, over to you.
Thank you so much for that. Well, Citi has a buy call on the stock with a target price of 380 rupees a share. They say all these three OMCs, they have performed better than the broader markets year to date by around 17 to 37%. And most of the outperformance is something that we saw at the start of 2024. And from those levels, we have seen consolidation on these stocks. Last 6 months underperformance is due to soft GRMs, weak marketing margins post the fuel price cut. And Q1 was weak for OMCs as well. However, these factors are resulting into underperformance will now be reversing according to Citi. And just for BPCL, they have opened a positive catalyst watch. This is something MK is talking about as well, how there was a negative surprise in Q1 numbers, but they continue to remain positive on all the three OMCs. And $80 per barrel of crude oil prices provides a comfortable financial position. Q2 FY25 till date margins are improving both on the marketing and refining side, and that is something that makes them very positive. They value OMCs at 6.5 times EV to EBITDA multiple, and they believe the outlook would improve further as key state elections would be done by Q3, so there will be no fear of further fuel price cuts and impact on marketing margins. They reiterate their buy on BPCL and HPCL and add on IOCL. So they retain their target prices on both HPCL and IOCL, but they've improved the multiple for BPCL, and that's why there's a target price hike of 10% on BPCL to 405 rupees a share.
Thank you very much for that. The midcap index is still up about 250 points, but many of yesterday's big winners, a Mazgaon Dock, a Shipyard, and Ola Electric, First Source, these are stocks which have been seeing a relentless up move, and there is a correction set in, and railways are on the back foot today. So RVNL, IREDA too are down about 1 to 3%. Mitesh is now back with us for a quick technical check on the markets. Mitesh, good going, 24,700.
Good morning, Nima. Very good going. And I think the key contributor is Bank Nifty today. I was talking about this in the morning. If the Bank Nifty starts picking up and starts getting past 5750, 5800 zones, then expect 51,400 and in a good case scenario, 51,800. So I think that remains the key. In fact, I have buy calls on two of them. Bank of Baroda is something which I like. That's a stock which after a good correction seems to be reversing. So buy here with a stop at about 250, 240.5 and look for a target of around 263. To about 265, and AB Capital is the other one, again from Fin Nifty AB of this NBFC space, wherein I would recommend a buy with a stop at about 214 for targets of 226.
Okay, thanks a lot, Mitesh, for that. Let's take a short break. On the other side, we'll be joined by a panel of guests from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference. Stay with us. Welcome back to Trading Hour on CNBC-TV18. Well, let's hear out some market opinion, this time coming in from Venugopal Gare, the MD and Head of Research at Bernstein India. Listen into what he has to say.
The fundamental reality is that you're not really seeing any earnings growth acceleration. And more importantly, you're not even seeing earnings upgrades. The only difference is that we are still in a decent macro cycle. Earnings growth are decent, even if they are slower than what we actually saw in the previous 2 years. So what is essentially happening at this juncture is the broader macro strength, which I think is fairly visible for the next few years, is ensuring that the domestic flows sort of remains resilient. Let's say 15 years back, previous cycle, which is perhaps the first mean cycle that we saw, and this sort of investment community was also smaller and perhaps just starting to understand how to professionally look at equity markets, used to be very embarrassed to put 20x Ps or 25x Ps on stocks. That's a fundamental reality. We have tried doing that during that phase in the peak of the cycle. We used to get slammed, both by investors who used to actually question us on the rationale of a high P such as 20-25x. Now, the difference with this time is that people are a bit more liberal. I don't feel embarrassed putting 100x P rate on stocks. Nobody questions me. People feel happy about it. And the same is the situation 50, 70, 80x P. So now we don't really need to keep very high earnings for the next 2 years. Our broader philosophy is to stay invested, but then alter your portfolio in such a way that you don't end up taking risk on low quality companies. Right? That's like the tricky thing. We're okay with high valuation companies as long as they're high quality or have a visibility for growth. So do remember that when liquidity is there, liquidity finds a way to get sucked, which primarily means you're going to see an acceleration in fundraising cycle as well. And not all of the fundraising will be high quality.
Okay, get into a break on that note. We'll come back and continue discussing the markets, valuation, earnings, flows. We'll get in the top team from Motilal Oswal when we return. Stay tuned. Welcome back. As promised from the sidelines of the Motilal Oswal 20th Annual Global Investor Conference, we now have with us Gautam Dugar, Head of Research Institutional Equities, Ajay Menon, MD and CEO Broking and Distribution, and Ashish Shankar, MD and CEO Motilal Oswal Private Wealth. Gentlemen, thank you very much for joining in. You all have been in discussion with more than 200 corporates. There have been more than 15,000 one-on-one meetings spread over the last 2 days and today, of course. And the attendance has been with marquee corporates, HDFC Bank, Hero, Godrej Consumer, Mankind, Trent. The list is endless. So, Gautam, let me start this discussion with you. Conventional wisdom tells us that market returns track earnings growth. Now, Q1 has been muted, and I think in your note you highlighted the biggest disappointment was the beat to miss ratio. The earnings upgrades to downgrade ratio was just 0.4x, which is the worst that we've seen in close to about 3 years. Is that concerning to you? And what was the feedback from the corporates with respect to earnings growth for the remainder of the year?
Hi, Rima. Good morning. Thanks for having us. So, yes, the earnings season began on a slightly muted note, or rather the year began on a muted note, but it was still in line with expectations. We were expecting that. Yes, of course, the breadth could have been slightly better, and maybe the small cap earnings were slightly more disappointing. But as far as the full year is concerned, we are still quite confident that we should clock 10 to 12% earnings growth this year, which, depending on where you come from, looks either very moderate or reasonably okay, given that this 12% will come on a base of 30% earnings growth of last year and on a base of 4-year CAGR of 20% earnings growth between FY20 to FY24. I mean, the scale of earnings have gone up significantly, Rima. 4 years back, the Nifty total profits were 3.5 lakh crore. Our coverage universe, 300 companies profit was 4.3 lakh crore. Today, that number is 11 lakh crore for our coverage universe and roughly 8 lakh crore for Nifty. So yes, this quarter began on a slightly muted note, but from here we expect things to pick up. The next 3 quarters we are expecting growth at about 5, 15 and 18%. That is how the entire year's growth aggregates to about 11%. Coming to the second part of your question, as to what the corporates have been saying, yesterday we had 8 CEO tracks, and since morning today we have already into the second CEO track. The outlook remains quite strong. We've had corporates representing financials, consumption, manufacturing and even commodity in the CEO tracks which have already happened so far. So growth outlooks look quite decent at the macro front. The heartening thing is that the rural seems to be picking up. That is the common feedback that we are hearing from multiple corporates, those who presented in the CEO tracks, as well as the ones who are attending the corporate meetings. So rural seems to be picking up after a long time, almost 3 years. So that is a very positive sign. The private capex also is taking a baby step now. Government has done its heavy lifting, and it looks like in the next 12 to 18 months, you will see private capex taking bigger shape now. So those are two very important takeaways coming in from our CEO tracks and corporate conversations so far in the day 1 and day 2.
Gautam, very helpful there. So the pickup in rural and private capex, right? Before I head to our other two speakers on the panel, I just wanted to complete this discussion with you, Gautam. This is Sonia here. One growing trend that we're seeing in India right now, which continues, is urbanization, right? I mean, as of last year, 1/3 of India's population now lives in cities. And because of that, we are seeing themes like real estate, whether it's, home building. Today, this whole cables and wires theme is doing very well. In your discussion with corporates, is this a big theme that people are speaking about? And if yes, how does one play this theme now?
Absolutely, Sonia. This has been a big theme unfolding since last 3 years. And the best way to play this theme is direct, rather than taking first or second order route. So the direct theme is real estate. We are having Godrej Property CEO session today, later in the afternoon. We've had a huge overweight on real estate for last 3 years now. If you look at the numbers are staggering. The pre-sales have gone up 4x in the last 3 years. The cumulative pre-sales CAGR of the coverage universe of real estate stock that we track has been upwards of 30%. And even on that high base, the next 2-3 years, we're expecting 25 to 30% CAGR. So if you have a slightly higher risk appetite, the direct way to play this theme is to take exposure to real estate stock. They've had a phenomenal run up in the last 2 years, so maybe there could be some cool off here or there. But the trajectory looks very solid to me. We are still in the early part of the middle of the cycle. This cycle, I think, can last another 3-4 years. The absorption rates in the top cities, 7 cities, are going up. And then, moving forward, you can take exposure to consumer durables, cables and wires, as you mentioned, where we have, KEI in our model portfolio. And then there are a host of other names which are adjacent to that theme, something like ceramics, the broad consumer discretionary pocket. But the best way to play such theme is to take a direct exposure, which is where we have a big overweight on real estate stocks.
Ajay, when at the beginning of the conference, we were chatting with Ramdev Agarwal ji, and he said he wants to gauge the FI view, the stance on India post the elections, or are high valuations still going to keep them away? What was your feedback when you chatted with the foreign institutional investors?
So I think, as we all know, that the overall market in this last 2-3 years has been led by the retail boom and the flow of money which is there. And that is what has been the very strong markets which we have seen due to the flows coming from the overall retail participation. But I think when we talk to the FIs and all, they are just waiting for opportunities to come in. That's what we can understand. And I think overall the India story is just here to be. We have got a stable government in place. We are also looking at the macros which are very much well in place for India. So looking at the overall global scenario, what we are facing today, and compare that to India, when we talk to the FIs, there is surely a lot of positive momentum to come to India. Now, question is the valuations. Surely, India is a little more at a premium currently. But I think at the right opportunity, there is more money to come in. And along with that, the retail flow is continuing. So the story continues. That's what we feel. But surely, short corrections are good to start investing again.
Okay, Ashish Shankar, coming to you, of course, the next big event that everyone's going to watch out for is the September Fed meeting. And the expectation is that it'll be the start of the rate cutting cycle. If and when that happens, what does this really mean for a market like India? Do you think that good news has been priced in? The fact that more money flow comes into a market like India, how does one read into it? And what's the assessment from, a lot of the investors or stakeholders that you have spoken to at your conference?
Yeah, hi Sonia, hi Rima. Really exciting to be speaking to you on the sidelines of our global investor conference. So I think, see, the big shift in this bull market is the color of money, right? If I look at the past cycles, we would always try and think as to what the FIs will do because they were a formidable force in markets. But no longer. I think the big shift is the emergence of HNIs, ultra HNIs and family offices. In fact, even in the conference that we are attending, we are seeing a huge number of family office investors, ultra HNIs attending this conference and talking to companies. So what is happening is that every time FIs are selling, the retail investors, I mean, Ajay just spoke about, I mean, they are becoming a formidable force because you see the number of demat accounts, the pace is not abating. I mean, you're still adding 42 lakh demat accounts every month. Similarly, if you look at the emergence of HNIs and ultra HNIs, there are about 40,000 ultra HNIs households in the country. There are about 2 lakh HNIs. And if you go further down the curve, the number just goes up 10x. So whilst, you know, there are these events on the anvil, I mean, Fed is definitely a big event, and I think the Fed has become much softer from 6 months back. So there is a clear expectation that before the elections are announced, there should be a policy rate cut. However, I can tell you that at every dip, there is enough liquidity on the sidelines, which is waiting to come in from HNIs and ultra HNIs. We saw it just yesterday, where FIs were net sellers, and it was a typical day in Indian markets where FIs were net sellers, but you saw that HNIs and ultra HNIs as well as retail were net buyers. I don't see this trend abating. So whilst rate cuts, etc., will definitely give a slight booster to the sentiment, but having said that, I feel that there is enough liquidity on the sidelines to come in at any dip that happens in the near future.
Gentlemen, do stay on. Ajay, Gautam and Ashish, we want to slip into a very short break, but we've got more questions for you, so we'd like to continue the discussion on the other side.
Welcome back. We are in conversation with the management at Motilal Oswal. It's a part of the Motilal Oswal 20th Annual Global Investor Conference, and we're getting many insights into what investors, stakeholders, corporates are thinking about. Gautam Dugar, Ajay Menon and Ashish Shankar are still with us. Gentlemen, thank you for taking the time out, precious time from your conference. Gautam, you spoke about many themes, right? Whether it's the pickup in rural, whether it's real estate, whether it's urbanization, private capex. Anything else that stands out for you, which could be a big theme of the rest of 2024?
So, Sonia, I think within the broader umbrella of financialization of savings, we are particularly very excited about the whole capital market architecture, which encompasses so many different subsectors. Your broking, wealth management, AMCs, the capital market infra firms, because as Ashish was mentioning a couple of minutes back, the demat accounts have gone up from 3.5 crore in March 20 to almost touching 17 crores now. And we feel that even if the momentum were to subside a little bit, we're still on our journey to track at least 25-30 crores demat account in the next 2-3 years. You must have read that in the month of July alone, 54 lakh folios were created in the mutual fund industry. SIP amount everyone is familiar with, whether on a gross or a net basis. So clearly this is a theme which can multiply manyfold. Already it is doing very well in the last 12-18 months, but I think we are still scratching the surface over here. And the second theme which I just want to mention is on the consumer discretionary side. 10 years back, consumption was very limited to FMCG and retail. Today, when you look at the consumption canvas, it is expanded significantly. You have hotels, apparel, jewelry, QSR, footwear, and I think many more interesting companies will be listed here. Today, we began our track with a very interesting and insightful presentation by the Zepto founder. So I think as the days pass, the opportunity to benefit from this increase in disposable consumption in India, it's going to present several opportunities, and the traditional way of playing that theme has changed significantly. Who would have thought 2 years back that Trend can become a 2 lakh crore market cap company? Or for that matter, companies like Zomato, Varun Beverages. So we remain quite excited at Motilal Oswal about this evergreen consumption theme, and within that, the consumer discretionary part. So these are two things I just wanted to highlight.
Any red flags from your corporate conversation?
So far, none, Sonia, but you know, the red flags are always the ones which you are not aware about, because the market always corrects more on events which you cannot forecast. You know, you go back to 2007, 2013, 2017, 18 ILFS, and then COVID. So I think a big durable correction, which has not actually happened in the last 15 years in this market post the, the global financial crisis. But any correction which is an order of magnitude more than 10% has typically happened in India on events which are not forecastable. The usual red flags are always around, you know, the corporate earnings slowdown, crude prices shooting up, in a world which we are living in where every week there is some geopolitical crisis, but market discounts those crises very fast because they are known things. The market typically corrects more on things which are unknown and which cannot be forecasted. So that's what I think will be the biggest red flag. Something which we don't know, because market valuations are very rich now. Nifty reasonable at 20-21 times, but mid caps and small cap absolutely expensive, trading at 60-70% premium. Something like midcap index trading at 35p in itself is it's been in no man's land for some time now, trading at a premium of 75% to Nifty. I don't think in the past when this has happened. So clearly the risks are many, given the valuations that you are negotiating with in the broader market. Nifty is still very reasonable.
Ashish, I wanted to come, to you on a point that Ajay was making a while back about how retail money has been flowing into this market in a big way, right? I mean, if you just look at the domestic institutional investor data, they've been buying consecutively for the last 11 days. But on the flip side, the FIIs has been a little bit wishy-washy. What's your sense of which way things could head in terms of the money flow into India? Do you think the large chunk of it will still be domestic money?
See, FIs have their own compulsion, right? For them, the world is their playground. It's not just India. Although I feel the interest on India is extremely high, but when they just look at India from a global lens, from a valuation lens, India just seems more expensive. However, there are very, very few markets or none which offer this kind of growth runway over the next few years, the kind of balance sheet that the country has, able to develop, and the kind of visibility that you have on corporates, right? So my sense is, look, eventually FIs will come in. I mean, they are also driven by rates globally. I mean, right now there is a China trade going on because China relatively seems extremely cheap. So there is a contrarian trade going on. So I feel that FIs will come in at some point in time. However, having said that, the retail flow continues to be extremely strong. And like I said, if you look at just the wealth that is sitting with the top 40,000 ultra HNI households is about $1.5 trillion, right? If you go down one step further, about $360 billion is sitting with about 2 lakh households. And if you go one more step downwards, about $800 billion is sitting there, right? And a lot of this wealth that has got created for promoters is no longer paper wealth. If you look at the number of block deals that are happening, right, and we just did some estimation that what is the potential block deal size over the next few years, and it could be as high as 15-20 lakh crores. And what is happening is, once the block deals happen, a lot of these promoters are creating their own family offices, and part of that allocation is going back to equities through wealth managers like us. So I think the domestic flow continues to be strong. I only dread to think if FIs also turn positive and they start coming into India, it is going to be a very, very crowded trade. So whilst, what Gautam is saying is absolutely right, that valuations look extended in certain parts of the market. However, with this kind of an optimism and flow, I would believe that valuations, even if they get slightly cheaper, the buying interest will come in a very big way. From FIs and domestics continue to be consistent buyers, and I think the SIP is the best part of this entire story because people who are coming into the market regularly, right? SIP has grown at 28% per annum, by the way, over the last 5-6 years, right? And this is capital that is making IRRs on a regular basis, right? So I think the domestic investor story looks extremely strong, and FIs, I believe it's a matter of time, and whenever they're comfortable with valuations or whenever they're comfortable with the relative interest rate trade, they will definitely come in. But at that point in time, it's going to become a very, very crowded trade.
These are staggering numbers, Ashish. 40,000 ultra HNIs are sitting with a wealth of 1.5 trillion, $36 billion with 2 lakh households in India. And I think the potential block deals, this 15 to 20 lakh crore of potential block deals, this is over the next 12 months?
Over the next 3 to 4 years, I mean, potentially how much the promoters need to dilute, because there have been a lot of IPOs that have happened, right? And a lot of these IPOs, you offer 10%, 15%, but eventually you have to go down to 75 to meet the SEBI norm. And a lot of companies, you've seen the market caps go up 4, 5, 6x over the last 2 to 3 years. And a lot of these promoters are thinking of taking some money off the table. And like Gautam said, I think the first thing that a lot of people love to do is buy a large house. So we see traction in the luxury real estate market as well. But after doing that, all of them want to create a family office and look at allocating this money back into financial markets.
Okay, well, Gautam, Ajay and Ashish, thanks a lot for joining us and speaking to us about everything related to the markets as well as the retail sentiment and your conference. Enjoy the rest of your conference. Thank you so much for being with us on the channel. Well, with that, it is a wrap on Trading Hour, but stay tuned. Halftime report is up next.